How's everybody doing today? Welcome back to the channel. So in this video, I'm going to be talking about all the stocks I'm currently buying in this market dip. Now today, dude, it's actually down a lot. It's down 3% almost. And if we look at the Dow, that's almost like 600 points, 700 points down today. And that's actually a big day, especially since we've pretty much been flat or going straight up for the last like basically 3 months, if not even more. The biggest dip we had was just about a month ago, but since then it literally recovered. So this is very likely that we're going to be seeing even a bigger dip in the next coming weeks, in the next coming month, because historically during elections the stock market dips about 20% historically because of all the uncertainty going on. And let's say the elections, a tie happens or someone disputes the other one and more uncertainty happens, it definitely is due for a bigger crash if that happens. So I'm going to be talking about all the stocks that I'm currently buying today. I did buy some today, but not a lot, because I do think it will come down maybe another few thousand points at the least, or at the at the least. So right before we jump into it, if you guys haven't already signed up for Webull, man, I would definitely recommend you guys sign up for Webull. I'll have a link down below. It's basically the second biggest brokerage app right behind Robinhood, and in my opinion it's even better than Robinhood, but it's not as big yet. And it's definitely, if you haven't heard of it and you live in the US, I would definitely sign up. You get 3 free stocks. It used to be 2, but it's 3 free stocks up until November 4. So if you haven't already, click the link down below, sign up, open up brokerage, and all you have to do is deposit $100 and you'll get 3 free stocks in total. And it's a great deal, especially if you don't have a second brokerage or you don't need to have a brokerage at all and you want to start investing. It's a great time to do it. It's a perfect time to do it. So the first stock I'm currently looking at is Stitch Fix. Now, unfortunately, I don't think this stock will dip too much because of the nature of the online aspects of it. So basically, about a few weeks ago, I started buying in the $28 range, but man, it's been up so much that I hate buying into starting a position and then it goes up so much that I don't feel like it's that good of a deal anymore. But if the stock does go back to the 30s, which isn't too unlikely, like low 30s, 32s, I'm definitely gonna be buying some more. But this is basically, if you haven't heard this before, it's basically a retailer turned into an e-commerce site. So basically it's fully e-commerce. They don't have a single location. You basically purchase every single week. You're gonna get a package in the mail, or every month you can like choose what subscription you want, and basically they send you an outfit and then you choose the outfit that you want. Whatever you don't wear, you return the rest. But the thing is, it uses AI and it's actually really crazy at picking out exactly what outfits you want. So if you use this service for like a few weeks or a few times throughout the year, it basically knows exactly what your taste is with the AI that it has. So it's basically, the CEO is like insane. The CEO is really smart. So that is that. The next one is Google. It's down 5% today, but it's still a bit too high. P ratio right now is at 35. And it's near fair value right now, so it's not the worst thing if you buy it. But the reason I always want to buy Google stock, I haven't been able to yet, is because I believe in like 5 to 10 years from now, there's basically gonna be like no TV. I think everyone's gonna be on YouTube or stuff like that. There's literally gonna be no one watching these like TVs anymore. And I think YouTube is literally going to explode even more than it already has in terms of viewer base, especially since they can get their monetization up even more and their YouTube subscription service up even more. Like if you watch YouTube, for example, a lot, like TV, you're gonna pay $5 to $10 a month to get ad free and support people you watch, right? So I believe that this will be huge. The forward P on it is 29. Now this is a little bit too high. 36 is fine. I don't care. Trailing P is all good, but the forward P at 29 is a bit too high. That's the thing. So I think I actually have it on my notes. If it goes down below 1500. So if it goes down at the 1450s and stuff like that, I'm definitely going to be looking to purchase it, like 1430s especially. Then I think I'm going to have to pick up a few shares. I don't think it'll ever go down to 11 to 1200s, especially since we've seen that this pandemic can't really get too much worse for these tech stocks especially. So 1450s, even below 1500s, I'm definitely very intrigued into purchasing Google. Next is Facebook. Now this is definitely insane grower in my opinion. Yes, it's already established, but let's go to the finance, right? Near fair value already. If we go to statistics, right? The 4P is only at 26 for a tech stock. That's fair. That's pretty fairly valued already. But that's not the crazy thing, right? They haven't. Their balance sheet is one of like really good. If we go to their growth, look, this growth is actually insane. So it goes from 30, 40, 50, 70. In 2020 might be it's already going to be 73, 74 because of all the basically the ads have been hit pretty hard. So at 73, this is still a fantastic growth in a pandemic, especially. If we go, I forgot where it tells you exactly. Okay, analysis. I think it's right here. They're expected to grow in 2021 another 24% next year. For a stock like Facebook, that is insane. So I think anything, it's still a little bit too high. Like it's still up for the month. It's down 4% today. If it goes down another 4%, we're looking at like $250 a share. At 250, anything below $250, I am purchasing. Believe me. In 3 to 5 years, especially if you just want to hold it for 3 to 5 years, I wouldn't buy the stock if you're gonna sell out in a few months. But if you want to hold for at least a year, 6 months to a year, at least, then I would definitely look into purchasing if it goes below 250, even 252, 255. Because this isn't easy. Anything under 300, even, man, long term, of anything under 300, a deal in my opinion. Look at this. It's gonna grow another 20%, right? Boom, you made 20% on your investment if the stock continues to grow. Obviously, if you guys don't know, they own Instagram. That's probably their main driver other than Facebook, Instagram. They own Oculus. If VR is big, they're also working on the like AI glasses for the very far future. If you're into that, they're doing a lot of stuff. This could easily be $1,000 market cap, easily in let's say 5 years. I'm giving a very generous estimate. 5 years, which is probably even too much. Easy $1,000 market cap. So this is easy money stock in my opinion. Next up, this is probably the last one, is Dropbox. Now, the thing with Dropbox is that they're really cheap. Their valuation's insanely low. Okay, let's look at the price to earnings. 357. That's bubble. That's a bubble stock. But obviously, if you look into deeper, that's kind of like a weird number. It's not actually that much. Their forward P is 22. Okay, I don't know what happened. Their forward P is at 22, which is cheap. So if you're into the next 12 months of earnings, they're cheap. It's a very, very cheap stock. And if you look at the financials, they've been growing once again like crazy. The revenues have been growing like crazy. In the next few years, they will reach profitability. I think that's certain. Like their earnings are barely negative, right? For the revenue, their earnings are like negative 5% of their revenue. So I think they're definitely gonna reach profitability. But the thing with this stock is, yeah, everything's perfect, right? You have a cheap stock, very cheap valuation. Their revenues are growing insanely. So I don't know what they're expecting them to do next year, but I think, yeah, their growth is easily 10%, easily. But the thing with that is, Dropbox is a stock that a lot of people won't buy because of the competition, right? You have Google Drive, you have all these other stuff. Yes, they're growing like crazy, and if you are bullish on Dropbox, you think they're going to continue. Now, the thing with Dropbox is that it can exist in a scenario where other competitors are there. Like you can have other competition and still have friendly competition. So a lot of people, and especially Wall Street, haven't gone through their heads that this competition, they think Dropbox is going to be done. Like, yeah, I used Dropbox like in middle school. I haven't even used it in high school. So I used it back in middle school. And but since then, like it's basically doubled its user base, doubled its revenue at least, right? So in terms of the stock, I do think it's a buy at this price. It's basically almost at the yearly low, actually. So it's almost at the yearly low. Yearly low is 17. So I'm definitely buying a little bit, but I won't go insanely heavy into the stock, especially since of the competition. I just can't feel right with this. But it's definitely interesting because the thing with Dropbox is that they own, I completely forgot to mention this, but they own a company called, I believe it's called HelloSign. Yeah, it's called HelloSign. It's basically like DocuSign, where you can basically sign your own papers. Basically, any landlord uses it. Any people to do digital signatures. Obviously, you have DocuSign, which is another big one. But if you look at DocuSign, it's a $40 billion company. So if subsidiary company, one of their companies of Dropbox, HelloSign, can grow anywhere near DocuSign, even at a 2 billion. Let's say it takes $4 billion worth. HelloSign does. You're looking at a pretty interesting buy. So that's that's another very interesting aspect of Dropbox. Now, lastly, I'm looking to buy like a digital gaming type of company, right? So the thing with those companies are they don't dip too much, right? I really want to pick one of those up, like a Activision or a like a Tencent stock. I already have a good amount of Tencent. I've made good gains on this, right? They basically own Riot Games, League of Legends, one of the biggest. Actually, it is the biggest gaming video game company in the world. But the thing with this is that this stock doesn't dip. Like this stock dipped right here and for a little bit when basically League of Legends plateaued, all their investments kind of plateaued back in 2018. I purchased the stock at the 40s and the 50s. But it's just been going up. It never dipped. Even in the pandemic, it didn't dip. So this stock literally dipped like maybe 5%. That's it. So I don't really see an opportunity of buying this stock unless you're okay with buying at all-time highs. But this stock is a beast as a long look. Their revenues are insane. Like this stock is basically one of the biggest companies in the world because they own like 10% of Call of Duty, of Fortnite, which are the biggest games out there. They own like 10% of Nintendo. I'm pretty sure they own like 20% or like a fraction of like literally every big gaming company out there. So they're like a giant, like such a big company that I don't really see an opportunity of a dip happening. I do own some shares, but I don't really see I'm up so much on my shares of Tencent that I don't really see myself upping my positions. So the next best thing, I've been looking at obviously Take-Two Interactive, which is GTA, but GTA is stalling quite a bit. They own 2K, like NBA 2K, but it's up 30%, and GTA hasn't done anything in the last year. They're making GTA 6, but how big can GTA 6 be? I don't know about that. So I'm probably looking at mostly Nintendo if it dips, or Activision. So I just gotta wait and see. I'm not too impatient with these two because they're obviously could not dip at all, and I wouldn't mind not purchasing them. It's especially since I have a lot of other stocks I'm looking to buy. So hopefully you guys enjoyed this video. This was a bit of a longer one, but if you haven't already, subscribe to this channel. I'm going to be posting more, hopefully. And if you haven't already, make sure to sign up for Webull. If you haven't already, use my link, start investing. Maybe you can open up a brokerage and fund your account at $100 and use that to buy some of these stocks I mentioned today if it dips even more. Make sure to take advantage of these dips. So if you haven't already, make sure to do that. And I'll see you guys on my next video.